With inflation at an all-time high, tons of volatility in the market, and basically no telling where the stock market's going to go on any given day, it's time that we talk about where to invest, and specifically where to invest $5,000. And yes, if you're reading between the lines here, there's a reason we're talking about $5,000 today, and that's because at the very end of this video, we're going to announce who won the $5,000 25,000 subscriber giveaway. The definitive guide on how to manage your credit, product, penalty, price, in that order. It's never been more important to get your mortgage right. Okay, so welcome back. Today we're discussing how to invest $5,000 or any amount for that matter in an economy where you have high inflation and a relative amount of uncertainty. Because right now we are at a time where we are seeing significant fluctuations in the stock market. Real estate values seem to be coming down, but there's lots of speculation that that may not last for long. And it's just anybody's guess what happens in any market at the moment. So investing your money and investing it wisely is something that you need to learn how to do, and you need to learn how to do it quickly. Because in a time like right now, where there's a significant amount of uncertainty, this is the time where there will be significant fortunes made and significant fortunes lost. And being in the right investment vehicles at the right time is one of the most important aspects of how you fare coming out of this. But before we get into all the details, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. And don't forget to watch till the end of this video where we're going to announce who won that $5,000. Oh, and by the way, there's a whole bunch of second place prizes that we're going to give out at the very end as well. So let's jump into it. Let's discuss how to invest $5,000 right now in today's economy, which is wild and crazy and totally weird all at the same time. So the first thing we're going to recommend that you do if you have a $5,000 or a $1,000 or a $10,000 or a $100,000 windfall that is there for you to invest is to first and foremost look at investing in a diversified ETF portfolio. Now, there's been a lot of talk recently over the last few years about Ray Dalio's all-weather portfolio. That might be a good place to start, but basically what you want to do is create a balanced portfolio of stocks, bonds, commodities, and precious metals. And if you can get those four things in a really balanced portfolio, you should be able to weather any storm, whether it is positive, negative, or the like. And you'll probably have a pretty significant amount of returns if you stick to a strategy once you've determined it. Now, why do we recommend ETFs? Well, the reason why is because ETFs are probably the easiest vehicle to help you invest in a diversified portfolio. And by the way, if you want to start investing in ETFs right now, the best way to do that is through a company called Questrade. There's a link in the description below that will get you $50 in free trades. But when you purchase ETFs, you can purchase them for free when using the Questrade platform. Oh, and if you want to go and take it up one notch more, you can use a system called Passive automatically just by being a Questrade member. I'll put a link to a video I made on that up here, but we use Passive and Questrade in conjunction for our own portfolio that is full of ETFs and is designed to stay balanced over the long term and basically gives us a way to dollar cost average over a long term. And all we're trying to do is we're trying to collect assets. So shares of ETFs, as many as possible over the long run. And that is our primary investment strategy when it comes to stocks. Now, yes, I dabble in buying individual stocks as well, but for a simple, easy way to invest, that is the way to do it. By the way, what's dollar cost averaging? That's when you add a certain amount of money every single month into your portfolio. You're always buying whether the market's up or whether the market's down. When the market's down, you get a really good deal. When the market's up, you're winning because your stocks are going up in value, and you end up over time getting really, really good returns. It is the simplest, easiest way to do this. By the way, investing isn't difficult. Pretty much everything you need to know can be written down on an index card. There's actually a book by that name that has been written and is very, very popular, and it doesn't have to be complicated. And this, in my mind, is the number one way that you can invest any amount of money right now just by putting it into a diversified ETF portfolio. Now, the second thing you could do is take this money, and because we're a mortgage and real estate related channel, we weren't going to miss a real estate or mortgage related idea, and that is to take that money and put it towards a down payment. Now, one thing here that you have to keep in mind is if your time horizon for buying is in the short term, you probably don't want to be investing this into stocks or bonds or things like that right now because of the high amount of volatility in the market. If you're 3 to 6 months away from purchasing a home, you don't necessarily want to have that money invested in assets that could go down in value significantly. Maybe put a portion of it in, but not necessarily all of it. And this is a really good way to use that money right now, especially when you consider that in inflationary periods of time, real estate values tend to go up. Now, that's not to say that they will right now because they've gone up considerably in the last couple of years, But if they stay flat or start to rise over the next 5 to 10 years and you're buying on a long-term time horizon, then purchasing a property and using this money for a down payment is probably a really, really good idea if you're looking at it from a long-term perspective. Now, the third thing that you could do with $5,000 right now, and a really smart thing to do, would be to invest in commercial REITs or real estate investment trusts. Why? Because during inflationary times where companies are making more money, commercial real estate tends to do very, very well. And given that we're coming off this lull in the commercial real estate market due to the pandemic and due to people working from home, and we're starting to see people go back to work, it's probably a really, really good time for commercial real estate. So you can look up the commercial real estate investment trusts in your market or ones that you find that would be to your liking and invest in those, and you'll probably do pretty well over the long term. By the way, the nice thing about real estate investment trusts is they pay dividends, which means you are earning income on your investment as well. Now, the fourth thing you could do, and this is probably the first thing you should be doing if you have debt, is pay down debt. If you have unsecured lines of credit, car loans, or credit cards, the single biggest returns that you'll probably find is paying down those debts. One, because it is being paid down with after-tax money, which means your returns aren't being taxed. So if you are saving 19% on your credit card interest rate, that's actually better than earning 19% on an investment, because that 19% you're earning on an investment is going to be taxed eventually. So paying down debt is one of the single best things that you can do. And given that we are heading into that inflationary period, paying down debt opens up cash flow, and opening up cash flow will make your life easier as the cost of things continue to go up. And the fifth and last thing that you could do with $5,000 or any amount for that matter is invest in yourself. This is probably the single best thing you can do to improve your career and your income potential. Whether you are an employee of a company and you're upgrading your skills to make yourself more valuable, or you're a solopreneur or an entrepreneur, investing in yourself is one of the single best things you can do. In fact, for our company, anytime I've invested in myself or my people, we've got a minimum of 10 times return. So just think, if you invested $5,000 in yourself, in your education, and making your skill set better, and you got a $50,000 return, well, that is a pretty good return on investment. By the way, the single best investment I ever made was in a course run by Darren Hardy called Business Masterclass. I spent $17,000 to go to that course, and it has earned us over the last 4 years in excess of $2 million. That's a pretty damn good return. $17,000 investment for over $2 million in extra revenue in our business. That to me is worth every single penny. And the only question for me nowadays is, how can I go and invest myself even more so I can get even more returns like I did from that Darren Hardy Business Masterclass? Oh, and as an aside, I probably wouldn't be here on YouTube if it wasn't for Darren Hardy and him talking about sharing information and doing everything you can to get your message out there to as many people as possible. So thank you, Darren, for that. Now, as promised, I told you that we were going to announce the $5,000 grand prize winner. That winner is Sue Bartuk. So Sue, if you're watching this, reach out to me in the comments section below. I'll also be reaching out to you via phone and email to tell you how to collect your prize. And on top of that grand prize, we are going to give away several $1,000 gift cards for Mortgage 360. So watch your email for that, because you may very well have won a $1,000 gift card for your next mortgage with Mortgage 360. And last but not least, getting to 25,000 subscribers was absolutely amazing. It took just a little bit over a year and a half from the time that we really started putting videos on YouTube to getting to 25,000 subscribers. I appreciate each and every one of you. We're going to have some really great things coming out. As you can probably tell from this video, we're going to move on from just real estate and mortgages to a little bit more about investing and general financial information, as well as business building. So stay tuned for that. And if you like this video, do me that favor, hit that subscribe button, hit that notification bell. Please hit that like button so more people like you can see this video, and we'll see you on the very next one. Cheers.